Hello traders, Gary Wagner here. Just about 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 14th day of August 2014, and this is the daily report for gold and silver. With just over an hour of trading left for the day before the afternoon break in terms of the cash market, of course, gold, New York gold is closed. We do have the market trading once again very, very quietly. Currently trading up about $1 on the day. You can see our current print on the screen, call it 1313 and change, 1312 in that area. Low 1308.20, the high 1321.30. Silver is also trading higher this morning. Current print on the screen, call it 1989. It's had a low of 72 and a high of 2011. More on silver towards the end of the show. So traders, very little can really be made out of today's trading activity. But what I am seeing, I will convey to you. And the first thing that kind of pops out at me is the fact that we identified a strategic point in which we should find some support, 1305 and then below at 1300. But when we look at this number at 1305, it's quite obvious that at least over this last week, we have not even ventured in or below that range by any substantial amount. This being today's Thursdays, Wednesdays, Tuesdays, and Mondays. The last time this market dipped below 1305 was really last week. The second thing that we can say when we look at this market is we've got a really, really narrowly defined trading range. We've also identified resistance currently at around 1320. Now, when we look at this particular candle in and of itself, what we do get is a higher high on the day and a higher low. But within the confines of such a dynamically small range, I'm not really making a lot out of that, except to say that we do have a market that I believe is building a base. Another way to put that is a consolidating market. But my sense is that it will build a base and then move to higher pricing. Now, another way to look at this market, and all I've done is gone ahead and compressed our daily to a weekly because there's been so little activity, so we could attempt to see any kind of pattern emerging or make sense out of the most recent data. When we do that, what we get is as follows. 1280, that was where we anticipated the conclusion of our corrective wave, which began at 1345, goes to 1280, I believe. And then we saw A, B, and C. You can't see it in a weekly, but you can see it in the daily charts. Now, when we look at this, I am looking at this as an intermediate 3 beginning to form. And this, of course, would be 3 out of 3, meaning 1, 2, and then our third wave up. Now, when we take a look at wave 1, for example, 1, 2, 3, 4, 5, it took 6 weeks in total to actually unfold before we got to the highs. When we take a look at the corrective action that followed, which are these 3 red candles, of course, that took 3 weeks on our weekly chart. So we had 6 weeks of price rise, 3 weeks of a dramatic correction in the market, and we are now in week 2 of what I believe is the beginning of a rally that I believe could be fairly substantial. Now, why do I say that it could be substantial? If in fact our model holds weight, and let's go ahead and convert it back to a daily. So if our model is actually going to hold true, and of course once we convert it back to a daily, this is really what we have been looking at. So we have wave 1 that begins at the beginning of June. Market's trading roughly 1240, takes us to 1340. We've got a substantial $200 rally. Then the market itself corrects. We looked at the individual waves in here where we had our first wave come down to a 50% point. The second B wave comes up to just above 50%. We have had other charts that have shown this between 50 and 75, which was our basic target. I thought it would go as high as 33. I was incorrect. It really stalled at 24. And then, of course, our concluding wave down here. And so if we look at this as our subcount, of course, all within an intermediate 3 is 1 here, 2 here, 2 completes at a 61% retracement. That falls in perfect alignment with our model. So the last step is going to be in forecasting where this third wave goes. And if we do that, and if we just basically go under the assumption that wave 1 and wave 3 will be equal, and realize the reason that I am putting that as a basic assumption is when we do an Elliott wave model, wave 3 cannot be the shortest of any of the impulse waves. So by virtue of that, if it's not the shortest and one has already formed, which we've talked about many times as our benchmark, then we have to say that this $100 rally that we saw in 1 will probably repeat itself in 3. And so to do that, obviously, we have to go ahead and compress this and then put this at the bottom. Now, one of the nice things about using a scalable line as opposed to a fib extension is that on the scalable line, and I'm going to go ahead and compress it and then move it out, but on a scalable line, what we do include is a time element, because realize that we are using the scalable line and we're looking at the 6 weeks that it took to get here, the 3 weeks that it took to get here, and now we're postulating that this could take another 6 weeks, of which we are really in the middle of week number 2 right in here. So we're looking at somewhere around, call it mid to the end of September, hitting our target. And our target is currently a $100 rally based upon the lows of 1280. We are assuming, our model is looking for the possibility of it going to 1380. I don't really see anything that has deviated from that. And that is what I'm currently looking at. Which brings us to silver. We are having some activity tomorrow in which they are implementing some sort of a silver fix in terms of the price. And I think that it's the uncertainty that surrounds that has really provided this pressure that we've seen in silver. Now, we have the equities markets, which has moved well off of the lows below 1900. I believe it's trading at around 1953. I would have to look, but it is up again today. It has been up solidly ever since it began to correct. And what we can say when we look at silver is it also appears as though we're forming some sort of a base. We currently have our support at 1978. My comment yesterday was if this doesn't hold, the only real logical level for silver to go to is going to be 1935. However, if it does hold, where do we think this market could go? And again, we have that same kind of formation in terms of the beginning of this rally with an impulse wave and a corrective wave now coming to 61%, much in the same way that we saw gold, assuming that we are forming a base and trading off of that. If in fact we see some activity and the ability for it to find support for more than 1 day at a time, because realize we are looking at a thinly traded summer volume right now in both silver and gold. But the facts remain is that when we look at just the sheer color of these candles, we have this alternating candle color, very small size bodies. You've got this one spike day that we saw, 2 small down days, an up day, a small down day, and again, we've got a market which is showing support but currently under $20. I'm not really a player unless we break through 50. I'll be honest with you, because my sense is that we've seen the market move to these highs only to back off. I need to see a clear and defined break above 2010, call it $20.10, before I'm a player in this market and recommend that to our subscribers. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the weekly wrap up and review. Bye-bye.